Have you ever found yourself navigating a big life change, maybe moving to a new country, buying a home, or, just making sure your family is secure, and suddenly you're looking at this whole new world of financial decisions? Well, today, we're grabbing our financial snorkel, if you like, and diving deep into one of those really crucial tools. Understanding life insurance in Portugal. Our mission for this deep dive is basically to unpack the complexities of Seguro de Vida, that's life insurance in Portugal. Using all the fantastic material you've shared, we want you to walk away feeling, well, truly informed and confident about this essential piece of your financial puzzle.
That's spot on. And what we'll be exploring today isn't just about getting a policy because someone told you to or because it's, a checkbox somewhere. It's really about understanding its purpose, its unique place within the Portuguese financial landscape, and how it specifically becomes a cornerstone for individuals and families.
Yeah.
Especially for you expats building a life here. Hashtag tag tag the why when life insurance becomes essential in Portugal.
Okay, let's unpack this then. From the material you shared, it becomes immediately clear that for many people in Portugal, getting life insurance isn't really an option, it's more of a necessity, especially when it comes to mortgages. What exactly does this mandatory requirement mean?
Right. It's quite fascinatingly deep, actually. Portuguese banks typically require life insurance when they grant a mortgage. And this isn't just a formality.
Huh?
It's a fundamental part of how they manage risk.
Okay.
It usually means having coverage for 100% of the loan amount.
Yeah.
And the bank itself is named as the beneficiary. That ensures the loan gets repaid no matter what happens to the borrower.
Right, so the bank is protected.
Exactly.
Mhm.
And critically, it almost always includes total permanent disability cover, too. IPD, they call it.
So it sounds like for many people, the whole journey into life insurance in Portugal starts not really by choice, but because the banks drive it.
Mhm.
That feels like quite a core difference in how financial responsibility is maybe structured there compared to, say, the US or UK.
It can be, yes.
Yeah.
It links personal financial security very directly to major assets like property.
So for you expats, understanding this means your security is sort of tied up with the loan itself. But okay, beyond that mandatory bit for the bank's risk, what about for our families? The protection goes way beyond just paying off the loan, doesn't it?
Oh, absolutely. That's where the real value comes in for individuals. Think of it as a financial safety net for life's biggest uncertainties.
Yeah.
Life insurance can replace income for your dependents, making sure they can maintain their lifestyle if you're not around anymore. It can guarantee funds for your kids' education. It can protect business partnerships if you own a business.
Right.
It offers pretty significant benefits for estate planning. And, it can even just cover immediate funeral expenses. That eases the financial load on loved ones during a really tough time.
And understanding all those different uses is, well, it's absolutely crucial, isn't it? Especially for you as an expat figuring out Portuguese banking and residency stuff. It's not just about the loan. It's about, like, total security.
Exactly. Comprehensive security. Hashtag tag tag the what types of life insurance available.
Okay, now that we've really got a handle on why this protection is so essential, particularly with mortgages, the next step is understanding what we're actually looking for. What different kinds of life insurance are there in Portugal?
Well, the most common type you'll probably encounter, and often the simplest, is term life insurance. Seguro de vida temporario.
Okay.
You can sort of imagine it like renting an umbrella. You pay for it only when you need it, so for a specific period, maybe 1 year, maybe 30 years, and if the unexpected happens during that time, it pays out.
Simple enough.
Yeah, it's pure protection. There's no investment part to it, which generally makes it the most affordable option.
I like that umbrella analogy. It makes perfect sense. So it's ideal for covering a mortgage or for young families' temporary needs.
Exactly.
And you usually get options to renew it or maybe convert it later.
Often, yes. And specifically for mortgages, the material you shared highlights decreasing term life insurance.
Right. What's that?
So this is where that umbrella starts to shrink as the need lessens.
Okay.
With decreasing term, the coverage amount actually goes down over time. It's specifically designed to match the decreasing balance of your mortgage loan.
Ah, got it. So it tracks the loan.
Precisely. This structure means lower premiums compared to a level term policy
Yeah.
because, well, the insurer's potential payout reduces over the policy's life. It's a format the banks readily approve, and it's really cost-effective just for that mortgage protection piece. It follows your loan amortization schedule.
Makes sense. And while they're less common in Portugal, your sources also mention whole life and investment-linked policies being available.
They are, yes. These offer permanent coverage, so they last your entire life. And they often include a cash value component that can grow over time.
The catches.
The trade-off is usually higher premiums, and the products themselves are generally more complex. And a really crucial point for you expats.
Mhm.
These investment-linked policies can have pretty significant tax implications, particularly if you hold them long-term or have reporting duties elsewhere. Always something to be mindful of.
Definitely noted. Good
So,
point. Hashtags tag the how much cost structure and premiums. Okay, that gives us a great overview of the different flavors of life insurance out there. But the big question for many listeners, I imagine, is cost. What actually goes into the price? What determines the premium?
right, the premium you pay depends on a mix of factors. Some are personal to you, some relate to the policy itself. On the personal side, your age is the single biggest factor. Then comes gender, whether you smoke, that's a huge one, your overall health condition, and sometimes even your job, if it's considered high risk.
Okay.
Then you've got the policy factors. How much coverage you want, how long the term is, any extra bits riders you add on, and even how often you pay your premiums, like monthly or annually.
Right. So to give people a concrete idea, the materials show some examples. For, say, 100,000 euro of cover over 20 years. A non-smoker aged 30 might pay maybe 10 to 15 euro a month. But a smoker, same age, could be looking at 20 to 30.
Doubles it almost.
Yeah. And if you jump to age 40, those numbers might be 20-30 for the non-smoker and 40-60 for the smoker.
It ramps up quickly with age.
And by age 50, a non-smoker could be paying 50-70, while a smoker might be in the 100-150 range. We also see examples for higher coverage, like 250,000 over 30 years. A 30-year-old non-smoker might pay 25-35. A 40-year-old over 25 years, maybe 45-65. Gives you a ballpark.
Yeah, those ranges are helpful. But here's where it gets really interesting for your wallet, especially with that mortgage life insurance we talked about. Your sources give this fantastic real-world example from Portugal. A couple, both in their 30s, needed cover for 190,000 more in mortgage.
Okay.
Their bank quoted them 79 euros per month.
79 euros. Okay.
But after shopping around independently, they found an alternative policy, same exact coverage, for just 43 euro per month.
Wow, 43. That's
Yeah.
nearly half.
Exactly. That translates to an annual saving of 432 euros.
132 euros a year.
Yeah, think about that. That's not small change. 432 euros a year, that could be a nice weekend trip somewhere in Portugal, maybe a really fancy dinner out every single month. It's not just a number on paper. It's real money back in your pocket, impacting your lifestyle.
It really hammers home, doesn't it, how much just doing a bit of homework can pay off.
Absolutely.
And that huge difference often highlights, I think, that potential conflict of interest when your bank is both your lender and your insurance provider. They might prioritize their own convenience, their bundled deals, whereas independent brokers are really motivated to find you the best price from the whole market.
That's the dynamic.
So that 432 saving isn't just money saved, it's kind of like avoiding the convenience tax by being informed.
Well put. Hashtag tag the who made your life insurance providers and your rights.
So speaking of the market, who are the main players? Who are the big insurance companies in Portugal for this?
Well, among the dedicated Portuguese insurance companies, you've got Fidelidade. They're a major market leader, have a huge distribution network, often competitive on mortgage products, and usually offer multi-language support, which is good for expats.
Okay.
Then there's Occidental, which is part of the AG's group. They have strong partnerships with banks, sometimes innovative products, and pretty good online tools. Real Vida Seguros is another one. They're growing their market share, specializing more in life products, known for decent customer service and competitive rates.
Any others?
And you have Generali. They have a big international presence, offer comprehensive options, strong financial rating, and they're generally seen as quite expat-friendly.
And it's also true that most Portuguese banks offer life insurance too, right? Often through partnerships or their own companies.
Exactly. That's very common. For instance, Millennium BCP often works with Occidental. CGD frequently uses Fidelidade products. Santander, Novo Banco, they all have their own underwriters or specific partnerships. It's very much integrated into the banking system.
Now, for you, the expat, especially if you're thinking about coverage that might need to be portable, maybe move with you across borders, the material also mentions international providers like MetLife, Zurich International, Allianz Global, AXA Global. What's the story there?
Right, so these international options often come with a higher price tag. That's the first thing to note.
Okay.
But they can be really valuable for the truly global expat, someone who anticipates moving between countries. They can offer a single policy that kind of adapts with you. They might provide continuity that a purely local Portuguese policy might not, sometimes offering options in different currencies too. It can simplify things if your life isn't just based in Portugal. More complex, but potentially more flexible.
Gotcha. And really importantly, regardless of who you're looking at, when it comes to that mortgage-linked insurance,
hmm
you, as the borrower, you have rights, right? You don't have to take the bank's policy.
Absolutely not. This is such a powerful point for listeners to understand. You have the right to choose any insurer that meets the bank's basic requirements, which are usually quite standard.
Yeah.
You can compare prices freely, shop around, and you even have the right to switch insurers later on after you've taken the mortgage.
Oh, even later.
Yes, though it's worth checking if switching might impact your mortgage interest rate. Sometimes banks offer a tiny discount for taking their insurance, but the saving on the insurance itself usually outweighs that by far. But that fundamental right to choose is your key tool for getting those big savings we talked about.
Knowledge is power, as they say. Hashtag beyond the basics policy features and medical underwriting process. Okay, let's dig a bit deeper into the policies themselves. What are the standard bits of coverage you typically find? The most fundamental is obviously the death benefit, right? That lump sum paid to your beneficiaries if you pass away.
Correct. And a key point from the material for Portugal is that this benefit is generally tax-free for your spouse and children. That's a big plus for estate planning here.
That is significant.
Yeah. And you can usually specify how it's paid out, maybe not just a lump sum, and you can name multiple beneficiaries too.
Okay, and what else is usually included, especially with those mortgage policies?
Very commonly included is total and permanent disability, or IPD coverage. We mentioned it earlier. This pays out if you become unable to work because of a total and permanent disability.
Right.
Now, it's really important to understand that the exact definition of total and permanent disability can vary quite a bit between insurers. And there might be reading periods before the benefit actually kicks in.
So reading the fine print is crucial.
Absolutely essential.
Okay, so those are the basics. What about adding extra layers of protection? Lots of policies offer optional riders, these add-ons. What are some common ones?
Yeah, you can often tailor the coverage. One popular one is critical illness coverage.
How does that work?
It provides a lump sum payment if you're diagnosed with a specific serious condition, like cancer, heart attack, stroke. The policy lists the conditions covered. It does cost extra, obviously, and there's usually a survival period, meaning you have to survive for a short time, maybe 14 or 30 days after diagnosis for it to pay out.
Okay, what else?
Another very common add-on is the accidental death benefit. This often comes as a double indemnity clause,
Meaning?
meaning it pays out an additional amount, often double the basic death benefit, if your death is specifically caused by an accident rather than illness. It's usually relatively inexpensive to add.
Got it. And one more you mentioned.
Yes, the waiver of premium rider. This one is definitely worth considering, I think. If you become disabled and can't work, this rider means the insurance company waives your premium payments. So your life insurance coverage stays active, protecting your family, even though you're not paying for it anymore.
Oh, that's really useful.
It is. It costs a little extra, but it provides significant peace of mind.
Okay, let's switch gears slightly to the medical side, the underwriting process. How does that work? Does everyone need a medical exam?
It generally depends on how much coverage you're applying for and your age and health history. For lower amounts, typically under 250,000 GRAC, let's say insurers, often just rely on a detailed health questionnaire. No medical exam needed usually. Decisions can sometimes be made almost instantly.
Quick and easy then, potentially.
But potentially, yes. But for higher coverage amounts, you'll almost certainly need a full medical examination.
What does that involve?
It can include things like blood tests, urine tests, maybe measuring height, weight, blood pressure, sometimes even an EKG, especially for older applicants or very high amounts. Insurers might also want to review your past medical records from your doctor.
Right. And what if someone has, pre-existing health conditions? How does that affect things?
That's a really critical point. Pre-existing conditions definitely impact the application. Depending on the condition, the insurer might offer cover, but exclude anything related to that specific condition. Or they might charge a higher premium. They could also apply a waiting period, meaning the condition isn't covered for the first year or two. Or, in more serious cases, they might unfortunately have to decline coverage altogether.
So what's the advice for applicants with health issues?
The absolute number one rule is full disclosure. Be completely honest on the application. Trying to hide something can lead to the policy being voided later just when your family needs it most.
Yeah, that's crucial.
Beyond that, it's wise to shop around with multiple insurers, as different companies assess risk differently. Consider looking into guaranteed issue products if they're available, although they usually offer lower coverage for higher premiums. And honestly, working with an experienced, independent broker is invaluable here. They know the market, they know which insurers might be more lenient for certain conditions, and they can guide you to the best possible outcome. Hashtag strategic moves, optimizing mortgage life insurance and tax considerations.
Okay, let's circle back specifically to that mortgage life insurance. We know the banks have requirements. Cover the loan, bank gets paid first, both borrowers covered, if it's joint, disability included. But beyond just ticking those boxes, the material shows some really smart ways to save money. The first big one you already mentioned. Shop independently. Don't just sign up for whatever the bank puts in front of you.
Absolutely number one. And remember to compare both level term and that decreasing term option we talked about. One might fit your budget and needs much better than the other.
Okay.
And here's an interesting one. Sometimes, for a couple, getting two separate individual policies can actually work out cheaper than getting one joint policy that covers both lives. Worth getting quotes for both scenarios.
That's a fascinating tip. I wouldn't have thought of that. And what about reviewing it down the line?
Definitely. It's a good idea to review your policy every year or so. And especially if you refinance your mortgage, that's a perfect opportunity to reshop your life insurance and see if you can get a better deal. Rates change, your health might have improved.
Good point.
And lastly, think beyond just the mortgage. Do you need excess coverage on top of the loan amount for wider family protection? Don't let the mortgage requirement be the only factor driving your decision.
Let's look at another one of those powerful real-world examples from your sources. This involved a Portuguese couple needing €200,000 of mortgage life insurance.
Yes. The bank quoted them €92 per month to cover both their lives.
€92.
But after getting an independent quote for the exact same level of coverage, they found it for just €48 per month.
Again, almost half. That's incredible.
48 versus 92. Over a typical 20-year mortgage term, that saving adds up to a staggering €10,560.
Wow. €10,500?
Yeah, that's a serious amount of money staying in your pocket just by being proactive and informed. It really shows the potential impact.
It really does. Now, if we broaden the view again, taxes. Always crucial, especially for expats with connections back home or elsewhere. What's the general picture for Portuguese tax treatment of life insurance?
Okay, so for residents in Portugal, the premiums you pay for life insurance are generally not tax deductible. You don't get a tax break for paying them.
Okay.
However, the big advantage is that the death benefit, the payout when someone passes away, is typically tax-free in Portugal if it goes to the spouse or children. That's a major benefit for estate planning.
That's good to know.
Now, if you have one of those policies with an investment component, any growth or withdrawals from that part might have tax implications. That's more complex. For non-residents, the treatment is often similar regarding the death benefit being tax-free locally, but it's absolutely vital to consider your home country's tax rules and any double taxation treaties between Portugal and your home country. Estate taxes back home could still apply.
Right. And you mentioned earlier, U.S. citizens often have extra things to think about.
Yes, definitely. U.S. citizens have specific IRS reporting requirements for large foreign life insurance policies. It's part of FBAR and FACE reporting, potentially. And those investment-linked policies can sometimes fall into the unpleasant category of passive foreign investment companies, or PFICs.
PFICs. Sounds complicated.
It is. PFICs basically mean foreign investments that the IRS treats with extra scrutiny. It often leads to much higher tax rates on gains and really complex reporting for U.S. citizens.
Yeah.
It's a minefield, honestly.
So the takeaway is,
Get expert tax advice tailored to your specific situation, especially if you're a U.S. citizen or have assets and income across borders. It's non-negotiable, really. For other EU residents, things like portability across EU countries and different tax treaties come into play. Always consult a qualified tax advisor. Hashtag tailoring your coverage, choosing the right amount, and life stages.
so after figuring out the why and the what's and the who, how
Yeah.
do you actually decide how much coverage you personally need? Is there a basic calculation method?
There are a few ways to approach it, but a good starting point involves looking at several key areas. First, income replacement. How much income would your family need to replace if you weren't there? A common rule of thumb is maybe 5 to 10 times your current annual income.
Okay, 5 to 10 times income.
Then add up all your existing debts, the mortgage, any car loans, student loans, credit cards, all of it. Then think about future big expenses, particularly children's education costs. University fees can be substantial. Add a buffer for final expenses, funeral costs, settling the estate, that sort of thing.
Mm,
Maybe 5,000 to 10,000 is a reasonable estimate there. So you add all that up, and then you can subtract your existing assets. Any savings, investments, maybe other insurance policies you already have, that could offset some of the need.
that gives you a target figure.
Exactly. It gives you a much clearer picture of the financial gap you need to fill.
What's really fascinating, too, is how these needs change throughout your life. It's not like
Yeah.
you calculate it once and you're done.
Not at all. It's
Yeah.
very dynamic. Think about the different life stages. When you're young and single, your needs might be minimal, maybe just enough to cover outstanding debts and final expenses so you don't leave a burden. But it's also the best time to lock in low premiums because you're young and likely healthy. Think about future insurability.
We're up point.
Lock in low rates early.
Then, young families. This is often the period of maximum need. Income replacement becomes absolutely crucial to support dependents. You need to factor in education funding and definitely that mortgage protection. Makes sense. Needs are highest then.
Then maybe you become an empty nester. The
Mhm.
kids are grown up, maybe financially independent. Your mortgage might be paid down. Your needs typically start to decrease. The focus might shift more towards protecting your spouse, ensuring they're comfortable, and achieving specific estate planning goals. You might even consider reducing your coverage at this stage.
Okay.
And finally, retirees. Income replacement needs are usually minimal by then. The focus tends to be on covering final expenses, maybe providing some liquidity for the estate to handle taxes or other costs, and achieving any legacy goals, perhaps leaving something for grandchildren or charity.
So it really does evolve significantly over time.
Absolutely. It's a tool that should adapt with your life.
Yeah.
Hashtag, tag, tag, getting covered and staying smart, application process and management.
Okay, let's get practical. Say someone's listened to all this, they're ready to get covered in Portugal. What does the actual application process look like? Step by step.
Right. First step, as we just discussed, is determining your needs. Calculate how much coverage you actually require.
Step 1, needs analysis.
Step 2, get quotes. Don't just talk to one company or broker. Compare offers from multiple insurers. Use those comparison websites. Talk to an independent broker.
Step 2, shop around.
Step 3, choose the policy that best fits your needs and budget.
Step 3, choose.
Step 4, complete the application form. And as we said, accuracy and honesty here are absolutely vital. Don't fudge any details.
Step 4, apply honestly.
Step 5, if it's required for the coverage amount you want, you'll go through the medical underwriting process, the health questions, maybe the medical exam.
Step 5, underwriting.
Step 6, once approved, the policy documents will be issued and delivered to you. Read them carefully, make sure everything is as you expected, check the details.
Step 6, review the policy.
And finally, Step 7, set up your payment method. Automatic bank debit is often the easiest way to ensure you don't miss payments and the policy stays active.
Step 7, pay premiums. Got it. And what about timelines? How long does this whole process usually take?
It varies. For a straightforward term life policy, maybe with just the health questionnaire, it can be pretty quick. Sometimes just 1 to 2 weeks from application to approval.
Okay, that's not too bad.
If a medical exam is needed, that obviously adds time, coordinating the appointment, getting results back. You're probably looking at more like 3 to 4 weeks in that case.
Right.
And for more complex cases, maybe significant health issues, very high coverage amounts, financial underwriting needed, it could potentially stretch to 6 or even 8 weeks. The key takeaway is to plan ahead, especially if you need the insurance in place for a mortgage deadline. Don't leave it to the last minute.
Good advice. Now, once you have the policy, it's not just file it and forget it, is it? The material really stresses the importance of managing it, maybe doing an annual review. What should people look for?
Yeah, an annual checkup is a really smart idea. Ask yourself a few key questions. Is the coverage amount still adequate? Has your income changed? Have your debts changed? Have your family circumstances changed?
Yeah.
Are your beneficiaries up to date? This is a huge one. Have you had children, gotten married, or divorced? Make sure the right people are named to receive the benefit. Is your contact information correct with the insurer? If they can't reach you or your beneficiaries later, it causes problems.
Simple but important.
Is the premium you're paying still competitive? Maybe it's worth getting a quick quote elsewhere just to check. And broadly, have any other major life changes happened? New job, new business, bought another property that might impact your insurance needs?
That's a great checklist. So, based on that review, when should you actively look to update your coverage? Increase it or maybe even decrease it?
You should definitely think about increasing your coverage after major positive life events. Getting married, having or adopting children, buying a bigger home with a larger mortgage, getting a significant salary increase, maybe starting a new business venture that adds financial responsibility.
Okay, when life expands.
Exactly. Conversely, you might consider reducing your coverage when your financial obligations decrease. For example, when your mortgage is fully paid off or is significantly paid down, when your children become financially independent, when you reach retirement and don't need income replacement anymore, or if you've built up substantial savings and investments that can cover your family's needs.
Makes sense. Adjust it as life changes.
Precisely.
And finally, on this practical side, navigating this whole process, are there any common mistakes people make that listeners should try to avoid?
Oh, definitely. We've touched on some already. The biggest one financially is probably just blindly accepting the bank's initial offer for mortgage insurance without shopping around. You could be leaving thousands on the table.
Don't take the first offer.
Exactly. Another common mistake is underinsuring, focusing only on the mortgage amount, for example, and forgetting about income replacement or education costs. Really calculate your full need.
Don't underinsure.
Critically, as we stressed, lying or withholding information on the application. It might seem tempting to omit a health issue to get a lower premium, but it can invalidate the entire policy. Honesty is paramount.
Honesty is essential.
Forgetting to update beneficiaries after major life events like divorce or remarriage, the money could end up going to the wrong person, which can be heartbreaking.
Update beneficiaries.
And finally, simply letting the policy lapse by missing payments. Life happens, budgets get tight, but losing your coverage, especially if your health has declined since you took it out, can be a huge mistake. Set up automatic payments if possible.
Keep it active. Got it. Those are really crucial pitfalls to avoid. Hashtag tag tag the expat edge special considerations for you. Okay, let's really zoom in now on what's unique for you, the expat listener, navigating all this in Portugal. A big question must be portability. What happens if you get a Portuguese policy, but then you leave Portugal?
That's a great question. And the answer is, it depends. Often, a Portuguese policy can continue even if you move abroad. But you need to figure out the logistics. How will you continue paying the premiums from another country? Are there currency exchange issues? And crucially, how will the tax implications change, both for the premiums and the potential payout in your new country of residence? Will beneficiaries face taxes there? It can get complicated fast.
Sounds like it needs careful planning if moving is likely.
Definitely. The alternative is looking at those international policies we mentioned earlier. They're designed for portability, often cover you in multiple countries, might offer currency flexibility. But, as we said, they usually come at a higher cost and can be more complex products themselves. It's a trade-off between local affordability and global flexibility. Really depends on your expected life path.
Right. What about language and service? Policy documents are in Portuguese, presumably?
Yes, the standard policy documents will be in Portuguese, as that's the legal requirement. However, most major insurers, especially those used to dealing with expats, can provide official English translations. You should definitely ask for one.
Good tip.
And beyond the documents, think about the service, especially the claims process. If something happens, will your beneficiaries, who might not be in Portugal or speak Portuguese fluently, get the support they need to navigate the claim? Look for insurers with good multilingual support and clear processes.
That's a really important practical point for families.
Absolutely. And ultimately for expats, it's about seeing life insurance not in isolation, but as part of your overall financial safety net in Portugal. It needs to integrate with your health insurance plan, any business insurance you might need, like key person cover, your travel insurance for trips back home or elsewhere, and even thinking about legal protection, maybe having a Portuguese will sorted to ensure your estate wishes are clear and minimize potential disputes for your beneficiaries. It's all interconnected in building that comprehensive security blanket.
A holistic view. Makes total sense. Hashtag tag tag outros intro. Well, as we start to wrap up this deep dive, it's really clear, isn't it? Whether you're facing that mortgage requirement or just, proactively looking to protect your family's financial future, life insurance in Portugal is, well, it's a vital tool, a really core part of financial security there. So our actionable next steps for you, the listener, are pretty straightforward, hopefully. Take the time to really assess your own unique situation, calculate the coverage you realistically need, make sure you compare multiple options, don't just take the first quote. Understand the terms and conditions of any policy before you sign. And most importantly, perhaps, implement the coverage you need without unnecessary delay. The peace of mind starts once the protection is actually in place.
Absolutely. And maybe a final thought for you to ponder, building on everything we've discussed. Think about this. Given how life can change, especially for expats moving to and living in Portugal, how might a well-structured life insurance policy be more than just a safety net for disaster? How could it actually be a foundational stone? Something that provides long-term peace of mind, helps build a family legacy, and offers stability, regardless of where your personal journey might take you next. Something to really consider.
That's a great thought to leave everyone with. Thank you so much for joining us on this deep dive into Portuguese life insurance. We really hope you found it valuable, and we encourage you to keep exploring these crucial financial topics as you build your life and security here in Portugal.